With the new financial year well and truly started, inflation numbers coming lower than expected, and the overall S&P 500 rallying and slowing down, how has my free trade portfolio weathered the past 4 weeks? So in this video, I'm going to show you my free trade portfolio, first showing my general investment account and then my ISA, so stay tuned for that. So as you may have noticed from the thumbnail, my free trade portfolio overall is a whole lot less than it was last month. And that is not because I've lost money on the stock market, well, not all of it. I have indeed started drawing down the funds from free trade for a number of different reasons. The first being that I've taken money out of my general investment account to feed into my ISA, which I did not choose to stay with free trade because of their elevating fees and their customer service not being that great anymore. So as you can see, in the past 2 months, I've withdrawn a considerable amount from free trade. So if I do some quick maths, that's around £17,000. So overall, my general investment account with free trade is minus £2,001 down. However, this is not very accurate because I've lost more than that. I've lost around £915 with Avaya Holdings and another £400 with Clover Health. They don't add that because these stocks are no longer existing in my portfolio because they have either gone bankrupt or they have gone public, so it's no longer on the list. So as you can see, over the past month, I am up by 1,450, which doesn't really sound that realistic because of my withdrawals that have been taken out. I don't think free trade has calculated that properly. But anyway, I'm going to go through all the holdings that I have, what they're worth, and my strategy going forward with free trade. So Intel is down as always by 43%, and Intel might actually be a company with a lot of future potential because of announcements in the fact that they're changing the way they're making the processors. Their 14th generation core processors, for example, are said to have level 4 cache, and they're shrinking their lithography down from 4 nanometers to 18 angstroms, I've heard. So going forward, if tensions with Taiwan and China are at all-time highs, Intel might be the company that the US backs in order to start making their chips, because honestly, if something does happen to Taiwan, the whole world's semiconductor industry, including literally everything, cameras, phones and everything, is going to be impacted, meaning that China will have a stranglehold over everything, including intelligence and everything, so it's not very good. So therefore, there's going to be a lot of push into Intel as an American-based company, even though it's not all in America, but is all in either Europe or America. There's going to be a lot more push in this company to produce semiconductors, to produce silicon for the world's technologies. So CSN in my portfolio is down by 30%, and I had 1.76 shares of that, so that's not a lot. Actually, going into this, I've realized that free trade has made a few UI changes. For example, the buttons here are different. They now have portfolio insights, which used to be a different tab, discover, activity and account. Also, they've included dividend payments, which they didn't have before, or at least I didn't notice that. So companies that do pay dividends, now it will say the ex-dividend date, so the date that you actually have to own stocks on, or one day before that. So it's good to see that with the extra money you're paying for free trade, at least it's going somewhere. But anyway, CSN is down by only £1.87, so I can't complain about that. Gap is down by 30%, which is actually quite big for Gap, but for me that's only a £4 loss. Xinhuan Real Estate is down by 90%, which is a lot of money to be down by, but luckily that's only a loss of £93 for me, which could be quite significant for many, but I've learned to live the consequences when you actually invest in random stocks that you have no idea what they are. So Kyndryl will never change, so there's no point in talking about that. Clover Health is down by a massive 93%, and in terms of dollar, that's minus 94%, so that's a loss of £840. If I had that, I know what I would spend that on, but yes, big loss. Clover Health not looking good. Looks like another bankruptcy is going to occur in my portfolio. I mean, I could sell right now, but honestly, for £56, am I really going to do that? I do not think so. But anyway, some analysts, at least 17% of these analysts, are saying that they are favorable towards holding this stock and that it could go up to $3. We'll see where that goes, but essentially I don't think I will get my money back with Clover Health. I feel like I lost another £900 on this, so it's a shame on me for being so silly. Saturna Al Kawthar Global something is down by 10%, so not too bad, and I think this is an ETF. ESG Global is down by 5%. Again, not a big holding. I had 19 shares of that, and it is just down by £3.75 for me. So Aston Martin, another big company with another massive loss, so this is a loss of £739. Like I said, I made a lot of losses on this portfolio in my general investment account because I didn't know how to invest, and of course these were bought long time ago, as you can see, in 2021 when the stock market first crashed. So with Aston Martin, I do have more hope than the other ones, but we'll see where Aston Martin goes to. CrowdStrike is down by 31%, which is negative £50, but I think CrowdStrike should be fine in the future. So Cognite Software is another one that's down by minus 83%, so that's £744 loss. So already those three companies combined has given me a loss of around over £2,000, which if I had it, honestly, I'd just buy something like a computer or something, because then I can edit my videos better. But yeah, I shouldn't have put money into them. But honestly, it's a good lesson for me to actually diversify my holdings and invest in other things apart from individual stocks, which I have no idea what the actual value is over. AGM Holdings, yet another massive loss of £720, so that's a minus £80 loss. I am stupid and I know this, but each portfolio update you'll see how these terrible companies are doing. Fastly, yet again, minus £637. There's not much that I can say here apart from I know how silly I am. Albion Mineral, again, a massive loss of minus 60%. Honestly, don't know what I was thinking with this company, but let's see what happens in the future. Maybe I'll make my money back and sell. So Alibaba is down by minus 53%, which is actually really big for such a large company based in China. At its peak, it was worth over $300 per share, so now it's down to 94, so it's not doing really good, and I think I bought it very high. So I actually bought £1,000 worth at $226, so let's hope that's not another £1,000 loss, because I know I could do with a holiday. Metro Bank is one that I do regret not having sold when it was in profit. So I actually bought Metro Bank shares for around £1.36, and as you can see in the 1st of March it was £1.50, which would have given me a healthy profit over £100. But then the Silicon Valley Bank incident happened and you can see it tumbled down. All the financial institutions, so all the banks, they all tumbled because of Silicon Valley Bank, and there are fears that these institutions may not have enough in reserves to actually pay out if a bank run occurs. So it's a big worry, but I think Metro Bank should be fine, so I'm going to still hold on for the long term. This doesn't pay dividends, so it's not the most fun company to hold, but you know what, I don't want to take it at a loss of £216 for a decent company like Metro Bank. Corsair is down by 40%, so I think I put 1,000 in this, and that's down by £400, which I could have bought some stuff from Corsair for that amount. So Shoals is down by minus 30%, which is quite big again, so that's a loss of £270. So this is a company that does solar power, and let's hope in the future this will go up and I won't lose all my money. So Beidou is a company that has been extremely volatile over the past month. As you can see, it had highs of $160, now it's back down to $128. In my portfolio, it's down by 22%, which isn't that bad, so that's a £204 loss. Given the current economic climate, it's not too bad, to be fair. Companies that are more than 80% down might actually be close to bankruptcy. For example, Clover Health, which is trading below $1, so it's very high risk of delisting, so we'll have to see where that goes, but I do definitely think it's going to be another loss for me. So last of my holdings is the S&P 500, which I now almost exclusively invest in and also try to do some trading in because it's very volatile, as you can see. So that overall I am up by 3.4%, so that's a £240 gain, and I've sold a lot of this. So most of the money that I have taken away from my general investment account has been from selling off shares in the S&P 500 from iShares. So currently I have no cash at all, and I do not plan to deposit any more into my FreeTrade general investment account. I will keep my ISA for the foreseeable future because I do like FreeTrade's ISA. However, the general investment account is literally just going to be there to wait until either these companies become bankrupt or they show some green skin, and I will sell them as soon as possible. So in terms of insights, it looks like I'm doing well, but that is because since March the 14th of this year, I have beaten the market essentially by 5%, and that's only just because I was investing in the S&P 500, selling and buying and selling and buying. That does mean that I am beating the market because of the volatility. However, if I go to maximum, you can see that I overall am down by minus 8.9% compared to the market average. The real number is actually closer to minus 20% because, like I said, Avaya Holdings completely bankrupt, and then Clover Health I lost around £400 in that. So now let me show you my ISA for the past 2 financial years, and I'll tell you this, I wasn't stupid and I didn't invest in random individual stock, and I did a whole lot better. And as you can see, it is up by £9,259, which is actually not too bad, and it kind of makes up for the losses in my general investment account. So I'm going to quickly go through the holdings and talk about my strategy in investing with this ISA. So Albion Mineral, again, for some reason I have shares here, so 2,403 shares, that's down by 56%. Mast Energy 554 shares, and that's down by 88%. Amazon is up by 19%, but I only have 0.2 shares, and that's not really worth talking about. Rolls-Royce 21 shares, that's up by 116%, so it's actually pretty good. Aston Martin I bought for much lower, so I actually bought the same amount of shares that I had in my general investment account, but just for way lower, and that is already up by £44. Disney is one of the only companies that is red that I have a significant amount in, or £200, and that is down by 23%, but we'll hope that Disney in the long run will go back to its former days, so I think Disney should be fine. Meta, for the first time in a while, has shown some green green, and that is up by £6.49. And lastly, my biggest holdings as always is the S&P 500, and as you can see overall it says I am up by 2%, so that's a £589 gain. But again, this number doesn't really always add up, so I have my own spreadsheet so that I know exactly when I bought for what price and actually how much profit I have. So currently I have 4,129 shares in the GSPX with a value of £29,072 in my ISA. It's very easy to see how much profit I've got overall in my ISA because it's literally how much I'm up by. This is because every single tax year you're only allowed to deposit a maximum of £20,000, and I always try to deposit that to £20,000. I've got my Trading 212 update coming soon, and I've already maxed out my ISA for the financial year, so that's 3 years now since starting investing that I've maxed out my ISA, which I plan to always do. So if I go back into the insights, since 14th of March again for the ISA I am up by 5%, and this is because I'm literally doing the same thing with my GSPX, so my S&P 500. I would definitely not recommend just buying and selling because you could end up losing more potential gains. It doesn't mean you're gonna lose your money, you can miss out on gains if you buy and sell. But for me, investing is really fun. It's something that I would pay to do, and essentially the risk that I'm taking is the cost of actually having that fun. So maximum, you can see my ISA is 36% up compared to the market average, and I am actually pretty happy and proud of that, and I do attribute it to the amount of risk that I take in my ISA. My strategy and my thesis is the fact that with an ISA you only have £20,000 that you can put in. Usually I lump sum this, so if I just lump sum and invest, I'm only going to get a certain amount. However, if I try to play around with the volatility, there is potential in making a lot more money than just leaving your money in and letting it compound. This is a risk I'm willing to take, and currently I am beating the market. Doesn't mean that I am going to completely always beat the market. Probably when the market stabilizes again, I'm just going to leave it because time in the market is actually better than timing the market. But for right now, I can bet my bottom dollar until the interest rates stabilize, there's going to be volatility in the market. So if I go into how much cash I'm holding, right now I am actually holding quite a lot of cash. I'm holding around £19,232 in cash, so waiting for the S&P 500 to drop again, and I would deploy every single penny into that. So conversely, I am hedged because I have lots of other shares in the GSPX as well, so if it goes up, it means I win in that way, but if it goes down, I also have cash to kind of pick up the pieces from there. So I am hedged. I do risk manage my investments these days, so don't worry about me. Make sure to check out some of my other videos, and I will see you in the next video.